I recently requested an AI to provide me with a trading plan capable of swiftly turning $100 into $10,000. While I received some general advice, such as concentrating on highly volatile assets, employing technical analysis, and maintaining discipline, these guidelines lacked specificity. To obtain a more precise strategy, I asked AI to devise the optimal plan using a machine learning-powered Tradingview indicator code. This indicator, which is currently gaining popularity, leverages AI technology. Additionally, I specified that the strategy's objective was to transform $100 into $10,000 as expeditiously as possible. The AI subsequently furnished me with a comprehensive strategy, albeit requiring some adjustments on my part, and here is the final configuration. To evaluate the effectiveness of the strategy, I will show you some buy and sell setups using Ethereum price data over a 3-minute period. However, before showing the setups, let's open the charts and incorporate the necessary indicators. The strategy encompasses 3 complementary Tradingview tools, each of which I will elucidate as we introduce them sequentially. Starting with the first indicator, we will integrate machine learning-driven K-nearest neighbors, KNN-based strategy. I extend my thanks to the creator, Capissimo, for this notable indicator. The machine learning strategy operates by examining historical market data to predict the direction of future price movements based on discernible patterns in the data. K-nearest neighbors, KNN, constitutes a classification algorithm that ascertains a data points category by considering its closest neighbors within a feature space. Within the context of trading, KNN classifies whether a stock's price is likely to appreciate or depreciate based on its historical data. The methodology entails collecting historical price data and converting it into a feature vector, which can incorporate technical indicators like moving averages, the relative strength index, and momentum indicators. Subsequently, the KNN algorithm is employed to classify these feature vectors, determining whether the stock price is poised for ascent or descent. This indicator does not repaint. However, it is advisable to await the closure of the candle bar before considering a signal. We shall continue to introduce the remaining indicators while elucidating their functions step by step. To ensure the reliability of a trade, it is imperative to adeptly interpret the indicator. In essence, the indicator predominantly presents blue and pink labels denoting buy and sell signals, respectively. The opacity of these labels fluctuates contingent on the signal's strength. It is critical to note, however, that this indicator should not be employed in isolation, as doing so may generate numerous false signals. Consequently, we must introduce the subsequent indicator, known as the EMA ribbon, developed by Hammond B3. The exponential moving average EMA ribbon functions as a trading indicator constituted by multiple EMAs superimposed on a price chart. Its primary purpose is to ascertain the trend's direction and strength within the market. The ribbon's formation entails plotting several EMAs, each characterized by distinct time periods. These EMAs are overlaid, creating a ribbon-like visualization on the chart. The AI also said to add a 200-period exponential moving average. When the EMA ribbon inclines upwards, it signifies an ongoing uptrend. Conversely, a downward slope indicates a downtrend. The EMA ribbon proves invaluable in identifying potential buy or sell signals, relying on the trend's trajectory and the price's position concerning these moving averages. Upon scrutinizing the chart, it becomes evident that this indicator adeptly screens out a plethora of erroneous signals. Nonetheless, a few persist. This is precisely why I recommends implementing the Relative Strength Index, RSI, as a supplementary confirmation. As you may be aware, the RSI serves as a valuable tool in trading, gauging the potency of a security's price movements. It materializes as a line chart ranging from 0 to 100. Typically, an RSI surpassing 70 denotes an overbought condition, while a reading below 30 suggests oversold conditions. In our strategy, we aim to heighten the RSI's sensitivity to attain more reliable trade entries. To achieve this, we modify the RSI parameters by configuring the upper threshold to 60 and the lower threshold to 40. Now, let's delve into the entry prerequisites for initiating a long trade. The closing price must surpass the 200 EMA. The EMA ribbon should be positioned above the 200 EMA and be tinted green. The price ought to undergo a pullback into the ribbon without breaching the long-term EMA. The machine learning strategy must produce a blue label. The RSI should either be in an oversold state or in close proximity to oversold conditions before the buy signal triggers. Once all these conditions align, you're prepared to commence a long trade. Establish the stop loss beneath the most recent swing low and target a profit equivalent to twice the assumed risk. Wait and take profit. For short trades, execute the converse protocol. Wait until both the price and the ribbon dip beneath the 200 EMA. The EMA ribbon should transition to a red hue. The price must experience a pullback into the ribbon without closing above the 200 EMA. The RSI should veer into overbought territory during the pullback. Subsequently, await the machine learning component to deliver the definitive confirmation. Additionally, it's crucial to note a significant caveat I overlooked earlier. Abstain from entering a trade if the RSI slips into oversold territory at the moment the sell signal materializes. Only open a short trade when all prerequisites are met. Position the stop loss above the recent swing high and set the profit target at twice the assumed risk. Wait and take profit. Anyway, thanks for watching this video. I hope you enjoyed it. If you want to see more strategies for crypto, check out our channel.